Thank you for attending our webinar today about finding new loans. My name is Tim Turzin. I'm a sales rep here at LKCS, and I'll be the one presenting to you today. First thing I like to always talk about for those who don't know about LKCS, we like to show this slide, and it just gives you a little bit of overview of our company. Just a little bit of background. We've been in business since 1961. Financial institutions are our business. All the products and services you see on our wheel here, have been derived to help our financial institution partners. If you have any questions on any other services or you see something there that you want more information on, feel free to contact me or your sales rep. We'll be able to walk you through a personalized demo of anything that you see. So today we're going to talk about finding new loans. One of the big questions, I always ask people are, who is more likely to take out a new loan with you? All right, is it going to be, one of your customers or a non-customer who's never done business with you? All right, I always feel it's easiest to get your customers to do more business with you than to try to go out and find new business from people that don't know who you are. All right, so a couple ways that we can target, our current account holders to get more business are credit prospecting and credit alerting. They are two separate services. And the differences are on the credit prospecting side, it's what we call a proactive campaign. You're going to market to prospects or existing account holders who meet specific demographic and or credit-based traits. So most likely these people already have a loan and you're going to help refinance that and bring that loan back to your institution, or they meet all the qualification criteria for a certain type of loan they do not currently have. All right. On the credit alerting side, it's what we call a reactive type campaign, where you're going to market to prospects or existing account holders who are actively seeking a loan elsewhere. All right, these are your account holders who are now in the market. However, they're going somewhere else for their business. We want to know about that. We're going to go ahead and get in front of them and try to keep that business in-house rather than losing it. A couple things before we really dive into the data and how the system works is, one, we are going to purchase data from all three credit bureaus for you. All right. It's kind of unique, and the reason we do this and use all three bureaus is because not all of the bureaus have the information on everybody. So we have to source that out to multiple bureaus so nothing slips through the cracks. You're going to see up to a 70% increase in the leads that we're going to get you back when pulling data from all three as opposed to just one. The biggest benefit to you is there is no additional cost to obtain that data from multiple bureaus. LKCS has preferred pricing with the bureaus, and since we deal with multiple financial institutions, we give them more volume than you could possibly give them by yourself, therefore getting that better rate for everybody. All right. Not only do we get this data from the bureaus, we actually supplement our data with other data sources to not only target people based on credit, but based on demographics or other things, so we can make sure we're going after the right people. So on top of the credit triggers that we look for, we can pull in demographic information, property information, automotive information. We can look at automated valuation models for home values so we can actually calculate that LTV for you. And then the persistent responder and householding. All right, so we combine all that into one database. We're going to get about 1,100 data points on about 215 million consumers. Obviously, that's a lot larger than any one institution will probably go after, but we do have the information there to target any specific, towns, cities, zip codes, counties, whatever it may be. Again, this is going to reiterate that point of why we choose to use three bureaus instead of just one. And you're going to see at that bar graph from 1 to 2, you're getting about 40%. And then from 1 to 3, you're getting that 70% increase in the leads you're getting back. All right. How I always explain this is just because, your institution prefers to work with one bureau does not mean that your account holders are shopping somewhere that uses that same bureau. It used to be, everybody in the same, geographical location would typically use the same bureau. With the internet now and you can apply for credit anywhere, that's not the case. So you want to make sure you're going to source that out to all three bureaus and you're not going to miss any potential leads or possibilities for your institution. So a couple things when using credit data is you're always going to be the one specifying your lending guidelines. All right. Some of these programs, they give you a sheet and say pick a couple things. That's not the way we're going to do that. You're going to actually specify any normal lending guidelines you would normally look for when applying that loan. Okay, we can help you. We can walk you through different things, give you ideas or suggestions of what other clients are doing. But more or less, we're going to keep that a blank slate for you, so to speak, so you get that criteria the way you want it. When we do pull data from the bureaus, we have to offer a firm offer of credit, which we're going to talk about a little bit more in the next slide. Any mail piece, email, telemarketing script, however you're going to get in touch with these people once we pull that credit, all that information has to be compliant with the Fair Credit Reporting Act. The big benefit here is LKCS is going to help you with all of that. All right. Sometimes when working with the bureaus or with another partner, there's a guide and it's a couple hundred pages, and they let you kind of figure that out on your own. We're going to walk you through every step of the way, make sure everything's in compliance, and you're not going to have any legal ramifications down the road. So what is that firm offer of credit? One, we have to indicate that the recipient is pre-selected, pre-screened, or pre-approved. Those are the terms that we have to use. It has to be, on the mail piece. You have to tell them in the telemarketing script, whatever it might be. There's also going to be terms and conditions or eligibility requirements letting them know why they've been pre-approved. So based off X, Y, and Z, you're pre-approved for whatever that loan it may be. We're also going to include information why credit may not be extended after all. So this is a little bit of a backdoor for you. Obviously, just because we're pre-approving them does not mean that they are guaranteed to get that money. All right, we're going to let them know what has to be done for them to actually get that money. They're going to have to come in. They're going to have to fill out a full credit application, make sure everything's the same from when we pulled the data to when you pulled it. If anything's changed, they lost their job, they can't repay, whatever it might be, they do not get that money. There is going to be a minimum dollar amount listed for which that recipient has been pre-qualified. So you're going to have to let them know you've been pre-approved for, at least a $5,000 auto, at least a $50,000 mortgage, something like that. And there's going to be some opt-out notice and disclosure information letting that person know how they can get out of receiving those pre-screened leads if they chose to do so. All right. So now that we have the base rule set, we're going to actually go ahead and start talking about the credit alerting service and how this is going to help with loan retention. All right. What this system is going to do for you, it's going to give you the ability to react with the right offer at the right time. You're going to be able to reach out to those account holders who are defecting to your competition. All right. So those people that are in the market, searching somewhere else, letting somebody else pull their credit, we're going to get notified and help you out there. Everything we're doing is based on the actual credit bureau data, and we're going to give that back to you so you can deliver that firm offer of credit and cross-sell additional products the moment we see a need has been identified. And the big thing there is the cross-sell opportunities, okay? Just because somebody's in the market for one thing does not mean you can't discuss another potential opportunity with them. All right. So just because somebody's in the market for, say, a mortgage loan and they're approved for your mortgage, most likely they're going to be pre-approved for an auto or credit card or whatever it might be. So definitely talk to them about possibly refinancing those if they have them elsewhere, or talk to them about your offers if they're in the market for those types of things. All right. So how this system actually works is that whenever one of your account holders applies for credit anywhere, an inquiry is posted to their credit file. The inquiries are then categorized according to the type of product that they're in the market for. So it's going to let us know that they're out there looking for a mortgage, an auto, a credit card, etc. We will have a database of your account holders on file here. We will then cross-reference your database with the bureau database every single day. Anytime we see somebody from your database matches somebody from the bureau database that was in the market, we will then pull that out and start the pre-screen process. All right. Once we go through the pre-screen process, if they meet your qualification criteria for whatever it was that they were looking for, they will then be passed on to you as a lead. If they do not meet the criteria, you will not see that as a lead. We don't do anything with it. It continues on. One of the other things that we'll do with these leads that you actually receive is we will then suppress them out of your data for the next 30 days or a timeline that you choose. So you're not seeing the same lead over and over and over again. If somebody's out there shopping, say for an auto loan and goes to 3 or 4 dealerships this week, you're not going to see that lead 3 or 4 times. You're going to see it the first time, and we're not going to look at it again for the next 30 days or so. Once we actually get this lead, it's going to give you the ability to respond with that firm offer of credit immediately after receiving it. All right. A couple of the other benefits of the system is you're always going to be able to select what categories and what inquiries you want to target. So you do not have to look at everything we've talked about. If you are only interested in this program to look for, say, mortgage leads, that's all you have to target. You don't have to look at the auto leads or credit card leads or anything else like that. All right. So you're going to prioritize what's important to you. We can definitely look at everything. We don't have to. Again, you're going to prioritize first, second, or third. So if you are doing multiple programs with this, if you always want to see mortgage leads first, we put that in the first position, maybe auto loans second, credit cards third. And that's the priority as these leads come in is what we look for. So if somebody's looking for multiple things, we're going to go ahead and look for mortgages first, then so on and so on. You can also prioritize the bureau. So we can put the bureau you prefer to work with in the first position. Therefore, we're always going to try to get the pre-approval done through that bureau. If they don't have the information, it would go to the second bureau of your choice and third and so on. All of the leads are pre-screened using your qualification criteria. So again, all that criteria you've come up with to pre-approve these people for the various loans, that's exactly what we're using to actually pre-screen them and give them back to you as qualified. All right. You can have multiple sets of criteria for different products or the same product. All right. So if you have maybe multiple mortgage campaigns that you have going on, different rates or different rewards or whatever it might be, you can actually set up 2 sets of criteria to target those 2 different types of folks that you'd go after and deliver them, the pre-approval based off what they qualify for. You do get daily alerts from all 3 credit bureaus. It is not 3 separate files. It would be 1 file combined, a little bit easier to use for you. So you'd get it all at one time. LKCS will provide those lists back to you. So you always have them regardless of how you're going to get in touch with these people. But we do promise to fulfill any direct mail or email offers the same day. So if you decide to do direct mail or email offers to follow up with these folks, LKCS can help you with that. We guarantee it goes out the same day the leads come in. You can definitely do it yourself, or you can definitely make phone calls. So a quick overview of the credit alerting system is we're going to provide credit-based activity alerts from all 3 major bureaus. You're going to be able to close those loans that would have went to your competition by comparing that bureau activity every single day. You're going to monitor and identify your account holders every single day that are in the market for auto loans, mortgages, credit cards, etc. You're going to set the criteria to identify those people that are going to qualify for those loans. You're then going to go ahead and send out a direct mail, an email, a statement-based campaign, whatever it might be, to those people that met the criteria, or obviously we'd provide that outbound phone call list to you, your call center, whatever it might be, to make phone calls. All right. It's a very straightforward service. We have, a lot of clients on it, using it. So if you want to talk to us a little bit further about this type of product, feel free to give me a call or one of your sales reps. We'll be happy to share references, best suggestions, and go into it a little bit deeper. This is a quick case study on the alerting side. This is looking at the mortgage alert system only. So if you add autos and credit cards, obviously the numbers can go up from here, but just looking at the alerting side, and we're going to just look at the top line of 15,000 account holders monitored. Obviously, we have a line of 50,000 and 100,000 there. If you're closer to those guidelines, we're going to just go over the 15,000 one right now. So at 15,000 account holders monitored, we're going to say a minimum of 1% is going to be in the market and meet your criteria. That's going to give you a bare minimum of 150 new mortgage leads a month. We're going to say a contact rate is 30%. Obviously, I've told you we have to contact everybody. However, we know as well as you know, not everybody's going to read the mail piece, open the email, take your phone call, whatever it might be. So we're going to say at least 30% are going to, read that mail piece, look at the email, take the phone call, actually take the offer to heart. Out of that 30%, if your loan officers can close 10%, that's going to give you 5 new loans a month at a revenue of almost $21,000 for that month. We're looking at an estimated alerting cost per month in the $1,800 range. So you're going to be looking at $12 gained for every dollar spent based off mortgages alone. So obviously, like I said, if you're adding the autos, credit cards, everything else, you can definitely make a lot more money than that. So with that, we're going to switch gears and talk about the credit prospecting service. Again, they are 2 separate services. So we're going to go ahead and talk about the credit prospecting and how this is going to help you with loan acquisition. Everything is available in the system for you to look for. All right. We can look for auto loans, mortgages, HELOCs, any type of auto or mortgage refinance, or any type of credit card. In this campaign, we're going to pre-screen existing account holders or possibly reach out to those credit qualified prospects who live in your area that meet a specific set of needs or criteria for various different types of loans to try to get them to come back to us. In this instance, we're going to extend pre-approved offers of credit to account holders and non-account holders based on actual credit information. Once again, you are going to set the criteria to identify the recipients that will qualify for these loans. All right, we're not going to make up any numbers for you. You're going to let us know exactly the criteria you want to qualify these people. We're then going to send out a direct mail offer, an email offer, do a statement-based campaign, make an outbound phone call, whatever it might be to get in front of these people and try to bring that business back. And of course, we have a system called DataFlex, which we've done webinars on. Most of you have probably heard about. It is a reporting engine to measure the results of these campaigns, but not only these campaigns, any marketing campaign you do. It's an MCIF alternative system. It does help you, measure the results for these campaigns. But like I said, it can be any marketing campaign. So any type of campaign that your marketing team's doing or, your institution's doing, we can set it up to we can track that over time to see how well that campaign did for you. So we can incorporate it for you, but you can also use it to identify cross-sell opportunities from the core processing system as well. All right. It's a whole nother service. It would, we could go into it deeper. It would just take too much time, but definitely if you're interested, let your sales rep know. We'll go ahead and get a demo scheduled for you and go through it. Here's a couple screenshots of what you could possibly get out of the system. So with that, we're going to talk about a couple potential prospecting campaigns. And these campaigns are things that we have come up with here. Obviously, the criteria is made up from us, so you can definitely adjust the parameters, adjust the criteria to fit you. I just wanted to give some examples so you can see what a prospecting campaign might be and how it can help drive business for your institution. So on the auto refinance side, one potential campaign is a lease expiration campaign. In this instance, we're going to look for FICO scores of 620 and up, exclude any late payments or repossessions that might be on their record, and these people have 1 to 3 months left on their current lease. All right. So the big benefit here is we know they lease a vehicle and we know that lease is coming due. Therefore, we know that this person is going to be in the market for a new vehicle within the next 1 to 3 months. I'd say 99.9% of people with a lease vehicle aren't going to trade that vehicle in or turn it in and start taking the bus. All right. They're going to get another loan. This is the time we can get in front of them, let them know what our current maybe used vehicle rates are if they wanted to purchase that lease vehicle outright, or potentially what our new rates are and why it's better to buy than lease, and how we can help them there and walk them through that scenario. All right. But this is the time to get in front of them, while they're in the market or thinking to get back in the market, because obviously they are going to need a new loan. On the other side, we're going to look at a straight loan payoff or a refinance opportunity. You're going to look for FICO scores of 640 and up, exclude any late payments or repossessions that they have on their record. We're going to look for a loan balance greater than, say, $5,000. Obviously, if we're going to spend the time to refinance somebody, we want to make sure there's a little bit of meat left on the bone, some money to be made for us. And then we're going to look, say, for a minimum savings on their monthly payment. So I want to guarantee that I can save this person, say, $25 a month. Okay, I'm not going to go out there and try to, send something or waste marketing dollars to send out a letter or an email or make a phone call to somebody who I know has a better rate than what I can offer. All right, so we're going to go ahead and look at that beforehand, make sure that we can save them money, and then make that offer to them. On the mortgage refinance side, first one we're going to look at here is a home equity refinance with that home equity in the first position. We're going to look for FICO scores of 640 and up, mortgage balances below $150,000. They have less than 50% loan to value, and no 30-day lates in the last 12 months. All right, so if they meet all this criteria, we're going to let them know to use that equity in their home for a variety of things. Whatever we want to promote, we can tell them to pay off high interest debt, remodel of the house, whatever it might be, we can get that out to them. On the conventional mortgage side, we can look for FICO scores of 680 and up, mortgage balance of, say, 100,000 and up, no FHA, VA, or reverse mortgages currently. The age of this loan is between 1 and, say, 6 years old. This way we know they haven't refinanced recently. We know the rates now are a little bit better than what they have been in the past. We're going to look for an estimated interest rate above X. So if you know what your interest rates are for a 15, 20, 30 year, whatever it might be, we can make sure that this person's interest rate currently is above that. That way you know you're going to save money. We can also do the payment savings here as well, just showing examples of what is possible, and then up to 95% LTV. To meet all that, we're going to go out, try to get them to refinance and save some money on that mortgage payment. A couple sample campaigns. And before I kind of go further in this, I do want to let everybody know that everything that LKCS does is 100% custom to you. So it will have your logo, your colors, your branding across the board. We're not going to give you a template and just plug in your logo and change the name of it and go. Everything is 100% designed, customized to you. All right. So this example here is just showing a regular postcard. It can be any type of direct mail piece. It can be bigger, it can be smaller, it can fold down. However you want to make it work, our designers can work with you and customize a piece that fits your needs. A couple other campaigns, possibly a letter or a statement cover letter. The personalized letter is just what most of you are probably used to. It's going to be a regular letter. It's going to be put in a number 10, window envelope, mailed out. Again, everything is customized to you, even the envelope. So the letter is obviously branded to you. That envelope is also going to have your branding, your logo on it as well. Everything that we're going to do is variable data. So different promotions, different rates, different pre-approval amounts. We can list the branch closest to that person, a loan officer maybe that they've dealt with in the past. Whatever information we want to put on that letter to personalize it even further for that person, we can do. The statement cover letter, this is something unique to LKCS clients, but I want to let everybody know about it because it is a great solution, is we'll actually turn that first page of your statement into a direct mail campaign. The most expensive part of any marketing campaign is the postage. All right, we're already sending out our statements or generating those e-statements. Why not make that a viable marketing solution for ourselves? All right. So in this case, we turn the first page of that statement into that direct mail campaign. The statement data would flow behind it on page 2 and following if multiple pages exist. Same thing with the e-statement. First page of the e-statement would be that letter. Statement data falls right behind it. You're taking advantage of that free postage because you're already sending it out. people look at their statements. All right, we have clients that are doing it this way to save on that postage and are seeing great results. So it's another option. Like I said, it is unique to LKCS. So if you're doing something else with your statements and think this is a neat idea and want to see what else we can do with statements, again, something else we can talk about or talk to your sales rep about, we can give you a demo there as well. On the email side, everything's the same as our direct mail stuff. Everything can be variable data, so different things and pieces can go into the email. That email template is going to be customized to you. It's going to have your logo, your branding, your colors, your message. So I make you wait all the way to the end to talk about the pricing. And I really can't go over specific pricing because everybody's got their own needs, and it's going to be more of a custom conversation or one-on-one after the fact. But I can go over what the cost entails or what it kind of is. It makes up the cost of these campaigns. So on the credit prospecting side, the pricing is going to depend on a couple different factors. One is the number of records purchased. And with that is also the third bullet of the credit bureau minimum charge. Okay, so there's a minimum charge of the system, and I can tell you that minimum charge is $750. That charge includes 3,000 records. Okay, once you meet the 3,000 qualified leads and purchase more than that, every qualified lead starting at 3,001 is 25 cents each. Okay. On top of that, there are demographic selects if you choose to purchase them. All right, these are all the optional things, the supplemental data that we talked about earlier that we kind of bring in. If you choose to use some of these things, they are additional costs. It is nothing that's going to break the bank. All right, these things are a penny or two a piece. So if you're looking at a 3,000 piece mailing and you use something for a couple pennies, you're looking at an extra $60. All right. We would quote those as one-offs as you use them or as you needed them. We would let you know what those costs were so you were aware of them. Talking about the minimums is hard. It's hard to really go over a pricing for a campaign on these webinars because so many people are on them and their needs are all different. So what I suggest anybody who is interested is we will run a count at no charge, let you know exactly what it would cost to run a campaign that you're interested in doing. Let you know exactly what it would cost to purchase the list, design the piece, mail it out. Any part of that campaign that you needed LKCS to handle, we'd give you pricing for it as a one-off scenario. We do this at any time. So go ahead and contact me after. Contact your specific sales rep. We can run those counts within a couple hours usually, get them back to you and get you a real idea of what that price would be. On the credit alerting side, everything is based on the number of account holders or prospects that you screen each month. All right, so the prices range all over the place. It's going to depend on the size of your institution and then how many of those account holders you want to monitor. So it's really hard to tell you what that cost is. Again, it's going to be something that you're going to have to talk to your sales rep or me afterwards about so we can give you that custom quote. But I also encourage everybody to run an opportunity analysis. All right, if this is something you're thinking about, what we like to do is we'll actually take your account holder database, we'll plug it into the bureau systems and look over the past 30 days. We will then report back to you of any of your account holders who were in the market in the past 30 days. We can also take it a step farther and add some of your criteria to it. So not only were 1,200 of your account holders in the market last month, we can let you know out of that 1,200 who would have met specific criteria for specific loans. So you can get an idea of what you can expect to get out of the system each month. So if you know that you're going to get 800 qualified leads a month, you can make a guess for how many you can close, what you'd be able to get out of that, and then obviously if the system would pay for itself. All right, so again, feel free to contact us after the webinar. We'll go over all that pricing with you and come up with that custom quote for you. That is everything I have today. So I want to thank everybody for joining the webinar. Hopefully it was informative. My information is on the screen, so please feel free to contact me after for any questions, pricing, anything like that, or obviously you can contact your account rep here if you already have one. So again, thank you. Have a great day.